Hello, traders. Cousin Vinny coming to you from theclosingprint.com, Sunday, the 7th of April, 2024. In this week's video, we'll cover the markets with the S&P 500 cash ping-ponging between 5150 and 5200 to end the week, with sector rotation apparent and strength in energy stocks to finish the week. For those of you trading more short-term, the S&P 500 cash needs to get back above 5250 over the next week or two. The S&P 500 cash is ping-ponging between 5150 and 5200 as previously mentioned. So just think of it as above 5250 bullish, below 5250 we want to be neutral, and if we drop below 5150, look for a test of lower support levels in the short term. That said, RSI did turn back up after that big drop on Thursday last week. Friday we bounced, volume picked up. We are starting to see stochastics reset, which is a good thing, though it could take another day or two. At the same time, the NASDAQ 100 or the QQQ tagging the 50-day on Thursday and bouncing Friday. We'd like to see this get back above Thursday's high and for RSI to continue in that upward trajectory. Stochastics and MACD are in no man's land. We could turn or we could push lower. If we do push lower for any reason, you could always trade the QID, ultra short Qs, which is just barely turning right now, so there's no hurry, but if the markets do start to make a move, this is something to consider as a hedge, especially if we continue to see weakness in tech stocks. With only 3 of 10 New York FANG index stocks closing red on the week, the rest were green, with the index consolidating recent gains right above the 50-day moving average. We can see a quadruple top. We've tested this overhead level 4 times already. RSI has turned back up, so that is more bullish to start the week. That said, the Russell 2000 had an off week. We closed down 2.78%, taking out the lows of the previous week. So the 10 EMA is right below price. We tested it, so there is a potential for this to bounce this week with overhead targets at 220, 235. If we were to lose this level, watch for a 50% retracement. At the same time, 5 of 9 sectors on the small caps are below their 21-day and oversold. There's potential for those to turn higher. Obviously, energy has been leading. So if you're trading IWM or thinking about it, watch for these sectors to turn higher. Notice the symbols. If you're looking them up, small cap energy is PSCE. Switching over to the New York Stock Exchange Composite 2000 stocks, we can see that we're clearly above the zero line, but the black line is starting to peak perhaps and maybe turn a bit lower. It's not an alarm per se at the moment. It just appears to be rotation in the markets. The number of stocks making new highs versus new lows is drifting a bit lower, but moving sideways as well. And we wound up with a blue elder stick on Friday. So the takeaway here is neutral, not bullish, could become more bearish, and something that we need to keep an eye on in the short term. 2 of the bullish indicators for the week were growth and value. Very interesting to see growth outperforming value on Friday after pulling back and dropping below the 21-day moving average. Growth has resurfaced back above the 21-day, and so has value. So all of these sectors apparently saw some rotation. Now, to be safe, we need to wait for Monday to see how this trend develops, and then we can trade accordingly with a bit more conviction. For now, the takeaway here is neutral, not super bullish, and not super bearish. The ARCA Institutional Index is trading above a very bullish-looking 50-day moving average, up and to the right, the 200 days up and to the right. So it could be that we're just going to see some consolidation. These are the 75 stocks most commonly held by institutions in their core portfolios, and something that we watch on a regular basis. Finally, we have the S&P 1500 composite, S&P 500, S&P 400 mid caps, and S&P 600 small caps, clearly in a bullish trajectory. Histogram is above the zero line, and price is above the 21 period EMA on the daily time frame. 1,500 stocks, the majority are neutral, not super bullish and not super bearish. Adding to the indices, we just want to take a look at breadth. Neutral to slightly bearish as the NASDAQ pushes a bit lower. Remember, the NASDAQ was above the 50-day, looked like it could bounce. The New York FANG index, we had 7 of 10 components bullish, while 3 were bearish. The takeaway here is if we start to fade more, I would say hedge or take more profits off the table, reduce your risk. If we manage to move back above the zero line, I would just assume that we're going to be neutral as we enter earnings season at the end of the week. JP Morgan reporting on Friday. One of the more profound impacts that we'll see is the 10-year yield as it continues rising, higher highs and higher lows. That's creating a headwind for U.S. indices. So depending on what the 10-year does this week, if we continue this trend, I would say it's more likely that we're going to have a little downward pressure on the markets. So keep an eye on the 10-year. At the same time, if we manage to see more weakness in the U.S. dollar and it stays inside of its Bollinger Bands, which happen to be contracting, that's telling us to look for more consolidation in this area in the short term. That would be helpful for the markets. So that's a caveat for the bears. More consolidation would mean one less bearish catalyst. And as far as commodities go, Brent crude continues to march higher. I was shocked to see it was above 91. I didn't realize that this bullish trend had broken out last week. I wasn't paying attention to crude and gasoline, both of which remaining in a bullish trend going into the election at the end of the year, and certainly adding to the potential for inflation to rise again. Not a good thing if you're sitting in Jay Powell's seat. So you hear the Fed governors talking about maybe there's a potential for fewer cuts or no cut at all. So you have to be a bit cautious at the present time as gold and silver continue their march higher. Now gold, I wouldn't chase it up here. I'd be looking for little dips like we saw on Thursday or a move back to the 9 EMA for potential entry. With silver pretty much doing the same thing, bolting out of a Bollinger Band squeeze, ripping higher on Friday. Volume shows institutions and traders are present. And the Reuters Jefferies Commodity Index starting to issue warning signals. If we see anything like we had in 2020, that led up to the bear market that started in 2021. So this is another thing. While remote at the present time on this monthly time frame, we are building momentum. So we want to see this roll over if you're bullish equities and not proceed higher. Sectors are still seeing some rotation. Energy is leading. And when we look at the consumer discretionary versus consumer staples ratio, this is a long-term indicator. We can see moving averages are sideways or neutral. Does not look like the turn that we saw that started the bear market in late 2021. More neutral, similar to what we saw in early 2021, and just a warning signal at the present time. So if you look at the sector summary, everything closed green on Friday, very strong, with only 6 of the 15 sectors that we're presently following below the 21-day and coincidentally oversold, ready to turn, with semiconductors near the 21-day, energy, oil and gas exploration, oil and gas equipment, XES and XLE, both very bullish. Industrials above the 21-day, financials above the 21-day, with JP Morgan reporting on Friday. Look at the oversold status here. We could see this turn back up. So sectors look okay, with only a handful below their 21-day moving averages. there is room for rotation. So it's neither super bearish or super bullish, basically neutral as sectors continue to rotate. I would look at some of these IBD 50 stocks that are listed below. Most of them are trending or ready to break higher. We do know that there's many stocks that have broken out last week, like Dell, Meta up over 8.5%, Nvidia bouncing near support, Netflix up 4.75%, and Amazon showing potential for a breakout in the short term. Keep an eye on these IBD 50 stocks. They may follow through this week. Stocks like Caterpillar are showing no reason to be concerned with the markets at the moment. JP Morgan, banks trending, industrials trending, energy stocks trending, ExxonMobil, Phillips 66, the refiners, material stocks, Freeport-McMoRan pushing higher, making higher highs and higher lows. Meta about to follow through on a breakout that started on Friday. Trending, higher highs, higher lows. Communication sector. The tech sector, stocks like Nvidia, managing to hold on support levels, 50 days just below. RSI is turning. And travel and leisure stocks continuing higher. Here's Make My Trip, trending since the breakout in November, December. This continues making new 52-week highs into April. Some of the casinos, MGM pushing higher. Wynn Resorts trying to break out. Las Vegas Sands closing above its 50-day. 50 is above the 200-day. We'd like to see the 200-day start to turn up and to the right. But most travel and leisure stocks looking a lot better going into this week. Royal Caribbean Cruise Lines grinding higher, while Carnival Cruise Lines had a brief pop on earnings and then started to fade. Most of you took profits below the 200-day at a double bottom, looking for this to bounce back above the 50 and the 200-day moving average as the whole sector, travel and leisure, looked pretty strong. With Booking.com trying to resurface above the 50-day, it's flat, looking for a push back up to the highs. With the industrial sector showing potential, something I noticed when I was running the scans this weekend, that many of the stocks in the group, look at the trend since November, 921.50 and 200-day up and to the right. These are the kind of stocks that you want to buy on dips. Carlyle Group, construction products related names, it doesn't report until May the 7th. Caterpillar, we talked about. Look at that trend. Many of these stocks in the industrials, the financials, materials, healthcare are all trending up and to the right. Centos, very economically sensitive industrial. They also have over 1 million customers worldwide. They sell and rent out corporate identity, uniforms, and everything related to the same. An economic indicator that we follow, when it's moving up and to the right, you can be assured that the economy is improving, not deteriorating. For that to be the case, you'd have to see price action moving down and to the right. This is Centos. Just putting a dash in front of the symbol gives you the reverse chart. This is not what the markets look like at present. Instead, we've got Centos up and to the right, giving you a thumbs up on the economy. So if you're thinking the worst of the markets right now, just consider the fact that there's many stocks that look like this. Cummins, they make engines, diesel, gas, and electric engines, up and to the right at 52-week highs. John Deere chasing Caterpillar with a very strong reversal. Many of you are in John Deere. Delta Airlines trending higher. Dover Corp up and to the right. Bollinger Bands contracting, getting ready for the next move. Dover being the operator of a portfolio of manufacturing companies, providing components, equipment, specialty systems, and support services for a variety of applications in the industrial products, engineered systems, and fluid management. The company reporting again on May the 2nd. And something to consider if you think the market's about to roll over. There are many, many, many stocks that I've reviewed this weekend that have this pattern up and to the right, 50-day, more importantly, with the 200-day up and to the right, telling you the intermediate and long-term trends are intact. Short-term trends on many of these stocks that I just showed you are bullish. Eaton Corp up and to the right. Does that look like it's topping out or getting ready to roll over to you? Yeah, it doesn't to me either. Look at the volume. That's institutions. Emerson Electric up and to the right. Fastenal up and to the right. 921.50, 200-day are stacked. RSI is pointing higher. Flowserve up and to the right. You see the pattern? General Dynamics, aerospace, military, and defense. Does that look bearish to you? General Electric blasting higher after spinning off part of its portfolio last week. Trane Technologies up and to the right. Many of these companies have been around longer than you've been alive. Does that look bearish to you? Lockheed Martin, aerospace and defense, nice cup and handle pattern. It's not trending as nice as some of the other names, but you can see this bullish activity. Looking for the follow-through? 3M with earnings out last week, higher highs, higher lows. PACCAR up and to the right. So if you're thinking the markets are about to roll over, a lot of these names look like that they can continue despite the pullback that we saw on Thursday. Stocks like this are continuing higher. Look for this pattern where the 50-day is up and to the right, where you have a nice clean chart. You have consolidation periodically every couple of months, and then the stock starts trending again, breaking out of a consolidation. Look for that pattern compared to stocks like Roku. Look at what Roku is doing, breaking down lower lows, lower highs. It's not trending like Caterpillar, right? So look for this pattern. We'll cover many of those this week. I just thought I'd share that with you because I saw a lot of stock in my review this weekend that tell me that underlying strength is present and that we may see a little bit of a pullback depending on macro data like the dollar and the 10-year, etc. In the short term. Longer term, everything is fine. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, Sunday, the 7th of April, 2024. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend, and we'll see you in the morning. Ciao.